Yeah, Wednesday. What's up, everybody? Wednesday morning. Welcome to today's edition, Daily Market Commentary. Hope you guys are all having a great day. It is a beautiful morning here in Houston, Texas. The sun is shining, the grass is green, the birds are chirping, and we still don't know who won the presidential election. I hope you guys all had an interesting time last night looking at the markets. And if you made any trades, please, I hope that you stayed very, very, very safe. So for those of you that are new to the channel, do me a favor, click the subscribe button, hit the notification bell. If you're a regular viewer, a regular watcher, click that little thumbs up icon. That would be absolutely awesome. That thumbs up icon lets people know that people are watching, paying attention, and part of the stream. Now, we don't typically delete lines on the charts. And last night, I posted a lot of, I was on Twitter last night, posting a fair amount of pictures and some interesting levels because I found it interesting to look at what the market was doing last night while we were seeing everything happen in the presidential election. So some of our levels were effective, but you'll see that there's some lines on there of some levels that were violated. So we're going to take a look at all of those today, just so that you can see everything that we have in play as far as our zones go. A real quick announcement for those of you that are Traders Army members. Tonight, remember that we have our Wealth Essentials session tonight, and that's going to be led by none other than Mr. Justin Krebs. Tonight, he's going to talk about annuities. So in the Wealth Essentials sessions, we talk about longer-term investing and longer-term opportunities. Make sure that you get a chance to jump in there. If you are not a Traders Army member, go to tradersarmy.com today. Learn more about what it is that we do, and then use promo code TRADER60, and you get 60% off your first month. Okay. By the way, there's also a free masterclass that if you want to watch our masterclass, you can just watch that masterclass. It's right on the homepage. All right, let's go ahead and get started. So S&P this morning, we are sitting up 60 points. And as I look at what we're doing right now in our 60-point, move higher, let's look at a couple of our supply and demand areas. And one of the things that I found really, really interesting last night was how well our levels actually held in the market environment. That's one of the things that I found pretty interesting. So yesterday, we rallied up. We did go through our first wick over wick area of supply that we had here. We went through that little wick over wick supply area. It was unable to stop price. But our secondary level worked extremely well for a pretty nice move away. And it actually gave you a second opportunity in here in the afternoon, wound up being a pretty good little level. So those levels go away, right, as we come into election night. Remember, I left the lines on there just so that I could review all of those with you this morning. But look at the overnight. We came smoking down into our demand level and then, boom, rallied up off that zone. Now, I will tell you, by that time, I had gone to bed. But the market had this strong rally up when we started to see some of the state-by-state announcements. The market rallied up pretty hard. And then as it became more in question, realizing that we weren't going to have all the votes counted, markets came back down. And now they've settled back out, right? So we're still up 50 points, but I think now we can start to look at areas of supply and demand and how they might hold. And so when I go down to the 15-minute time period, I'm going to take a look at this area right here as a potential, but it's not what I'd call amazing. It's not a great level. And it's because of that lower wick. The lower wick really weakens the quality of this level and of this zone. So with that lower wick coming into play, I know that it's a slightly weaker, slightly less probable zone. And in that instance, I don't know that I would want to take this if price comes into there. I think, as I go to a 4-hour and look a bit higher, we're seeing an awful lot of wickiness in here, but I think this is a lot to do with election trading. And overall on the daily chart, let's look at the daily chart. I still would wonder if we are going to be able to get above these highs, right? I do need to see, do we get above these highs? Because getting above these highs would be actually very telling for us. After a very strong week down, we've had a couple of strong days back up. I'd still need to get above those highs on the daily chart. On the hourly, when it comes to my supply, there is this supply area over here. But once again, this level's already been tested once. We came into it again last night, and now we're back into it a third time. So now I think that price continues to move up to this 3461 area. I think that we're going to see price move up potentially into this 3461 area. And if you want to take a long, you're going to need to wait for some sort of a basing area for a breakout or a pullback to a quality area of demand. Now, this wick over wick is fairly clean on the hourly chart. On the hourly chart, it's fairly clean on a pullback to 33.89 by 33.75. But I think we're going to find better markets in our better opportunities in our other markets. Moving to the NASDAQ. Now, the NASDAQ last night, yesterday, did come to our supply level. We got off of our 15-minute area of supply. Now, this one, unfortunately, was a 6-candle rule stop out. 1, 2, 3, 4, 5, 6 candles later, you're basically right where you started. And so while, yes, we did get a nice little move away from there, in reality, you probably got a 6-candle break-even trade on this position, right? And the 6-candle break-even trade on this position, as price came there, came back up, dropped again, came back up, dropped again. But notice this. When we see a level hit 3 times, when we see the same supply area hit 3 times, what does that now become? I want somebody to type it in the chat box for me. Everybody get your fingers ready. Let's use the chat feature that we have available inside of YouTube here. And what happens with 3 touches that are inside of a zone of supply? Very good. Nick and Liz and Larry and Andrew, very good. It becomes a breakout opportunity, and that's what we saw was the breakout. The breakout was actually the cleanest trade. Now, that's exactly what happens is it becomes a breakout opportunity. But I will say that Ingrid points out something pretty interesting is that old supply oftentimes becomes new demand. Old resistance oftentimes becomes new support. And that's where we saw price trade back to later in the evening. Later in the evening, price traded right back to here before then rallying up. Now, we did make it all the way to our hourly supply level, and it just cut through that one like a knife through butter, right? Blew right through that area, just straight through it on news. And so now what are we looking at for a reversal trade? Well, on a 15-minute chart, I don't have a whole heck of a lot from a reversal standpoint. I will say that this is still a decent breakout area. Yeah, price does have memory, Ingrid, no question about that. This still is a potential breakout area, but I would still prefer to see more basing there, right? This is a breakout line, by the way, that we had from 2 weeks ago that has now been revisited, but I would need to see price give me the quality basing in order for an entry. If I don't get the quality basing necessary for an entry, then I've got to look for a bit of a pullback. And on an hourly chart, your wick over wick area is right here, although that's not a super clean wick over wick because this lower wick doesn't encompass this whole body, right? For wick over wick areas, I want that lower wick and those upper wick to both be encompassing of bodies. So we're getting areas, but nothing that is super clean. In the Russell, now looking at our Russell market, Russell yesterday, we talked about this area in here acting as a potential for a breakout after price had based sideways on the demand. We did get a bit of a breakout here on the Russell, but our better setup was all the way back from Monday, right? The long off of this level. Funny enough that we came back last night and almost retested Monday's low. Didn't quite make it all the way down to Monday's low, but almost gave it that Monday low retest. So we saw, interestingly, and I will tell you, I was pleasantly surprised last night to see how well the market was respecting areas of supply and demand. That tells me that we had an orderly market, okay? That tells me that we had a bit of an orderly market, and that orderly market was something that was a good thing to see because we didn't see that the market, was going to go crazy really one way or the other. It didn't make huge swings one way or the other. And I don't, there's still some votes out there to be counted. I don't know that we're going to see gigantic swings on it, but I can't make any predictions or guarantees. Okay, so that's the level that I would look at inside the Russell. Yeah, 4 years ago was completely different, right? If you remember 4 years ago, Ingrid, we had a limit down. We had a limit down earlier in the evening, followed by a 1,000-point rally back up in the Dow Jones. I mean, it was absolutely for the time that was humongous. All right, so when I look down below, I see this 1586 by 1583 is a decent little area of demand if price pulls back to that 15-minute level. You're probably going to be better at the actual pivot. Liz has a great question. I saw that too, but what about the relative difference in the percent increases in the four indices? I found that I was looking at that last night, which I found really interesting. Was at one point the Nasdaq was up humongous while the Russell was down, and that's still what we have today, right? The Nasdaq's up 3, the Russell's down 0.5%. But then the S&P was basically only up like 20. So we were seeing that the Nasdaq was the one that was really taking off. I think what it said to me, Liz, is that there was a lot of speculative buyers that were jumping in. I think that's really what it tells me. Speculative buyers jumping in, but I can't know that for certain. And then the last one we'll look at here is the YM. So looking at the Dow on our 15-minute chart, man, yesterday's demand level worked like a charm last night in the midst of the election. As prices came down into that level, then we saw the big move away. Now, didn't make it to our breakout level, came back and retested this overnight. And I think that of all of our breakout trades, I'm going to remove this supply level above us. Of all of our breakout trades, I think this one is the best. Now, this comes all the way back from here, from this pivot, and we are just a bit outside of it right now. But I think that's our best breakout trade for today if price bases and we get above there. The Dow is the one that gives me the cleanest entry for that. Now, on a 15-minute, you've got a super tiny, very clean wick over wick right here. 27,417, 27,387. I know that says 86, but that's a little bit wider. Let me zoom in on that to make it as close as I can to the exact number. There you go. 27,416, 27,387 would be more of that exact number. Okay. Let's see. Rohit Kumar says, will you be able to cover the MES? We can take a look at the MES. It's going to look the same as our ES level for the most part, right? And so if I look at the micro ES, it's going to look the same as my regular ES level. Whereas you do have this little bitty 15-minute wick over wick right here at 33.93 by 33.89. And when I go to the hourly chart on this micro ES, you could still get a breakout at this level right here, and then trade that up into the next resistance area, which would be right up in here. So there is still room right there. Yeah, micros are usually going to be very close to those minis. All right, so let me pull these back up. Let me share this grid. All right, next, let's go to commodities, energies, and metals. So gold last night was one of those ones that went, oh, right? It really made you shake your head a little bit. So we'll go to gold in a minute. Let's start with oil. Oil continued its rally up pretty much all day yesterday. We were not able to come back. We were not able to come back into our area of demand and give it a quality retest. I will say that right now we may have potential breakout above 39, right there at that 38.92. Your first target would be probably up here at 39.47, 39.40. So just keep that in mind. It's not a super huge profit margin at this level. You do have a pivot right here that occurred overnight in the London Open. And so if you want to be a bit more aggressive on a long entry, if there's a pullback, you can look right here as a bit more aggressive long entry on a pullback. Gold. So gold last night, this was our 15-minute candle, and it was like kapowie. So that one was unfortunately a small stop out because the market just completely blew right through our zone, right through our level. Didn't really give us any hope on that one, unfortunately. And then our confirmation short yesterday wound up coming back to the origin of the move up, getting us a little bit of profit. But what we talked about yesterday was that the profit margin was really slim on that if you wanted to stay in on that position. I need to remove both of these lines now, but that was one of them that, I think I tweeted out with the big eyes doing that kind of thing, because that's a candle that'll really suck you around. I mean, it just dropped all the way down. And when you think about this candle, right, we dropped 20 points. I'm gonna go to, and I know I don't go to these very often, but I want to show you what that looked like on a 5-minute chart. That was a 5-minute move of 20 points in gold. The gold dropped 20 points in 5 minutes on this one candle, and then rallied up 20 points. Yeah, Peter, it was. I will tell you that was more than a 2-finger pour last night. That was a little more than a 2-finger pour, and the first picture I took was not the first pour. Last night was it was a little bit of it started with a wee dram of monkey shoulder. I don't know if anybody likes monkey shoulder. It's kind of a low funk scotch, followed by a little bit of Lafroig. And then we finished up the night with my own personal barrel aged. They were all small. Don't worry, they were all small. Half the scotch was on the table. Wasn't on the table, but it certainly was not a great setup. But I will tell you, the Dow Jones setup was the one that was really the key setup of the night last night. So, all right. So looking at gold. And by the way, we only condone responsible drinking here at tradersarmy.com, and want you to make sure that you drink responsibly. But like Julia Childs once said, everything is good in moderation, including moderation. So looking at gold now, on our 4-hour chart, we are, very much somewhat sideways. I'm wondering if we could get an IC for this. I'm going to take a look for an iron condor today and see if there's anything worth looking at. I don't know that there will be, but our volatility should be high enough that we can get some decent credit. We certainly can look at this area right here. This is definitely the origin of a very strong move up, and it's a pretty decent time of day. But that my fear is that might be a little too obvious. Unless you are Dwight. Yes, Dwight is the man. So, all right. When I take a look at Nat Gas, we are based in front of the level. We started basing there yesterday, and I thought we were going to get into it. I thought we were going to get into that level yesterday afternoon, and just did not. We had a really nice strong move into it, and then we based sideways. So that's the kiss of death on this level, unfortunately. Kiss of death on that zone. But now, if we make it back up to here, this becomes a decent little entry opportunity. Yes, Tushar, we can do that. No problem. Copper came to our breakout trade. Breakout came to the reversal, and then broke back down again, hit the reversal another time, and dropped away very hard. So copper, yesterday, most of the good trading of copper was done in the morning, for those of you that were able to catch it. But now I need to remove both of those levels. And so in looking at what we're going to do today, my 4-hour trend, this looks like a very weak little mountain range, I guess is the best way that I would call it. It's a very weak mountain range, right? You've got small mountains here, a couple of them back here. Bob Ross would be painting some happy little trees on this thing. But as I look at this is oftentimes the setup for what's a next move down. And so if we get basing here, then I think you've got a decent little move down into this area of demand. All right, I'm not going to do all the commodities today, Tushar. I'm only going to do corn since that's what you asked for. Because I want to make sure that I have enough time to get to currencies because those were moving around last night. All right. So looking at our ags, let's start with corn. And corn didn't really change anything from what we had yesterday. We still have a breakout trade above 404, and I still think that's valid when I look at corn as the best opportunity is the breakout trade. My reversals, I don't love this level here because it's a retest of all this area over here to the left. And so, you might even have a breakout down in corn. When I look at the 4 hour is giving me a bit of a topping pattern up here in the fact that we pulled down and we're unable to put in a new high. That's usually a bit of a topping pattern. But we're also forming a smaller time frame base in here. So I think it's actually setting up very well for price to break out above here and make it up to there and then drop lower. That's what it's looking like. Playing chess, looking a few moves ahead. It looks like it's potentially going to base here, rally up to here, and then we'd get our drop lower. And it may not make it all the way up to here. It could actually stall at about 410. Let's see. Soy, I guess I will just take a quick look at these because I want to make sure that my grid is updated. Soy yesterday came into our supply level early in the morning and then moved away right to the opposing area of demand by 8 o'clock last night. If you did take this position, you got a nice little move away. There was no reason not to take some profit off the table. You probably didn't get be honest, I didn't even look at soy last night. It was not on my radar. So I did not grab this move back up. And then we retested it again. And so now both of these levels, they gots to go. Since both those levels gots to go, I'm going to look to, is there a breakout possibility above 1075? Well, I'd need a much cleaner bit of basing there in front of it, and I just don't have it at the moment. So I'm going to come back and look at here as our next best reversal opportunity. Wheat, unfortunately, blew right through our level last night. It did come close and then move away, forcing this to then become a confirmation entry. But it just poked right through that one. The supply level above us is still very much in play, though. But it should, by all rights, be a confirmation entry now. By the way, why should it be a confirmation entry? I want somebody to let me know in the chat window. Why should that become a confirmation entry? And then bean oil. So looking at bean oil, we have a breakout trade that has happened. But I will tell you that breakout trade didn't give me very good, Liz. It was almost hit the level. That's why it becomes a breakout trade. It almost hit that level. If I go back to it, you can see we came close enough to it for me to switch to a confirmation. This is not going to give me an entry on the breakout. I can't take that. It's just not a good breakout entry. However, this area here is pretty clean, 3377 by 3370. All right. Let me zoom in on that a little bit so that when I share the grid, y'all can see it. All right, let's move over to bonds and currencies. They were a bit wonky last night as we saw some of them really come hammering down. But then the bond market, did we take a huge run up last night. Big violent move up is what I would call it. Did actually get yesterday a pretty decent opportunity for the breakdown. 1, 2, 3, 4, 5, 6 candles later, we were basically at break even. And so you probably either moved your stop to break even or closed out. If you moved it to break even, you actually probably got a nice little profit out of that trade. If you closed it out, it was still no risk after that position. So we then came down into demand. Now, looking at this area of demand, I will tell you, bond markets were really telling that we sold off at the end of the day. Oh yeah, all that drama, and we're still. You're totally right. All that drama, and we're still, from a daily chart perspective, we're still kind of range bound overall, and still need to get above this wick to go anywhere. Um, Hourly chart, though, we came down to that area of demand before then reversing and going much, much higher. This is another example of, for the most part, our demand levels holding. We came a little bit below it. Um, Oops, not the daily. We came a little bit below the area, but in reality, we didn't get anywhere near below where the pivot would be or where our lowest low would be down here. And so from that move higher, now did we set up a new area of demand or a new area of supply? Well, we cut right through this supply area last night as well. So it sliced through a couple of levels, and news is ultimately going to trump those levels when the news is big enough. Now, when I look at this on a 4 hour, our trend is technically I don't have I got a lower low and I've got a higher high than this area right here. So I'm just gonna not add anything to this. Just not gonna add anything to this. You're right, I agree, Dennis. It would take some kind of an event to get there. Um, the great I'm sorry, the ZB, the 30-year, that one also had the same breakout. Price did rally up to our supply, hit our first supply, got a little move away, and then hit our second supply and got a pretty good move away, all the way down to here is as low as it got. But in reality, if you were trading the bonds last night inside of that market, then you are. I mean, you got to remember these institutional investors and traders. They got people at campaign headquarters, like. And I'm not going to jump into the bond arena in the middle of a presidential election. So I don't know if anybody was doing that. I'll be here to tell you, I am not one of them that was. I'm sure that there are some people, though, that have that kind of, what's the word that I want to use? Fortitude to feel comfortable enough to jump in and to deliver those positions. All right, the euro. Now, the euro was kapowie yesterday. So looking at our euro overall, we had, at the end of the day, price, we got our little bit of basing. We did get the breakout set up in order for us to get long. 1, 2, 3, and then our stop is down here. That son of a gun just came right down in here to get us a small stop out. I mean, that's frustrating when that happens. Sometimes that happens. It just does, right? Now, price then gave us that big rally up, and it came right into our area of supply. We talked about it yesterday that I thought this was going to be probably our best level, one of our best levels, because it's a drop-based drop right below a pivot high. Hit that market and moved away swimmingly. So much so that it went right through the next demand area. And that was all during the election period. Now, what are we looking at for at the moment? Well, I got to get rid of all these levels. What is this telling me that I should probably be doing today? Just tell me what your opinion is, and what's it telling you that you should, on a 4-hour chart, what is that telling you should be doing? Should you be a buyer? Should you be a seller? Or should you sit on your hands because there's a lot of unknown and volatility? We're just going off the past few candles. What is that telling you? Yeah, that's a lot of wicks, man. That's a lot of wicks. And so I'm sitting on my hands. Sitting on my hands. Euro, Canadian, right? We're going to see this in our currencies. Now, by the way, are there trades to be made? Sure there are, but they're all on the smaller time frames. They're all on the smaller time frames. And so, like, for example, on this Canadian dollar, if you want to look to this area here on a 15-minute chart, I think that's probably your best area. But they're all going to be on those smaller time frames as your best opportunities. Do not force them. Okay. All right. Let me share this grid real quick. All right. And then on my last currency page, I'm just going to pull this up here real fast. You're going to see a lot of the same thing. I'm just going to kind of highlight a lot of the same areas. New Zealand dollar did a lot of the same yesterday with what we anticipated on that 4-hour chart. I mean, 4-hour chart here is telling me the exact same thing. It's telling me stay the heck out of Dodge. There's no great levels. Great British pound, and the 4 hours my big picture, right? It tells me should I be a buyer, should I be a seller, should I sit on my hands, right? And that's kind of what's telling me the same thing in this one as well. On a 1 hour, if I look at this on the 1 hour, we broke through the 15-minute. We did wind up bouncing off of this level for a good little, call it 4 to 1. But once again, I'm not sure how many of you were out there actively trading the Great British Pound last night at 8 p.m. Eastern time or Central Time U.S. All right. Now, if you were, you got a nice little, probably a 4 to 1 move off of that little wick over wick. And it was pretty effective. And then we came back down through the second time. So when I look at the pound today, anything I look for has got to be on that small time frame. And while this is tempting right here, if you're going to take it, you got to go closer to the pivot, somewhere down in here. I actually kind of like this little wick over wick that was just recently formed a few minutes ago for a short, for a very small day trade. Very small day trade. It's very minimal exposure, very minimal risk. Japanese yen. Japanese yen, we hit our demand level last night super hard and rallied up off of that zone. It actually gave me the best demand area left in its wake if we get a pullback right into here on the hourly chart. And then the Aussie, this one just sliced right through our demand area down below. Now, it went through the supply area, but that was a confirmation entry anyway. And then our 15-minute area of demand, we just sliced right through it. But once again, 8 o'clock at night. I mean, it's back to that same concept. And on my 4-hour chart here, it looks a lot like the euro does. So on most of my currencies today, I'm gonna be a little bit more interested in being safe and staying away from some of those positions. But I'll keep my eye on them, but I don't see me jumping into a lot of currency positions. I will be interested to see, I've not heard any projection as to when they think the votes are going to finish being counted. I've heard as far as 6 days for Pennsylvania. And so if Pennsylvania has 6 days to count those votes, then, if they've got 6 days to count those votes, then who knows what's going to happen over those 6 days. I will say this, if you're going to trade your levels, just trade your levels. Just be cautious of where those levels line up. And yeah, there's still a lot of absentee ballots out there. And those are, from everything I heard on the pundits last night, those skew a little bit more on the blue side, more to the Democratic side. So Jersey Trader, I don't really, because they all trade against the dollar. And so I don't really spend any time looking at the DX. It doesn't really matter to me all that much because all these currencies that I trade are against the US dollar. So I basically look at the DX without ever looking at it, because if all the currencies are going up, I know that the DX is going down. The other thing is that the dollar, when you look at levels of supply and demand in the dollar itself, is it going to have a tremendous amount of validity to those levels of supply and demand since it's measured against 6 other fiat currencies, right? It's an index measured against the performance of the other currencies. So does it have its own true demand and supply? So, all right. Well, that's all I have for you all today. I hope you guys have an amazing, amazing Wednesday. Remember, tonight, Justin is doing his session on the annuities. If you are not a member, please come to tradersarmy.com. Join us. Be great to have you. Trader 60. And then tomorrow, no YouTube live tomorrow. We're going to be in the live trade room tomorrow morning. So peace out. Thanks so much, everybody. I'll talk to you. Awesome.